Whether you have a strategy or you don't have one, make sure to watch this video until the end because I'm going to give you 3 ways to enter your trades. They're very simple to follow, they'll provide you very good risk to reward ratio, and they can be applied with any strategy out there on any instrument and any time frame. So let's check them out. So let's talk about the first entry model. This is the break and retest strategy, as you can see on my screen. But today I'm not just going to explain how the break and retest strategy works, I'm also going to give you 2 more tools which are going to help you find those really good entries in the market. Now you have to remember, the main rule when trading break and retest is that you need a trending market. Otherwise, price isn't going to give you those pullbacks that you need in order to find good risk to reward ratio entries, right? But essentially what we need to see is for price to break in above or below previous structure, depending on whether you're looking at a bullish or a bearish trend. But in this example today, we're going to have a look at a bullish trend. So we need for price to be creating, impulses to the upside and giving us good, decent pullbacks, all right? Every time upon the retest of a previous high, we're going to be looking for a certain market reaction, all right? Now, you have to keep it simple, and that's the only way that you're going to be able to follow your strategy day in and day out. Okay, if your strategy is very complicated and you've got 20 different steps that you have to tick off every time you look for an entry, you're probably going to get confused and you're not going to be able to do that on a daily basis. But when you have a simple strategy, that's when you can make it work. So we're going to be using one entry model, and this is going to be the engulfing candle. All right, very, very simple. Even for those of you who are just starting out, you have to learn a few candlesticks formations, and you can use them with any strategy, all right? And the engulfing candle is one of those candlestick formations. So we're going to be using one time frame only and one entry model, all right? So let's move on right here to the 4-hour time frame on euro dollar. Now, this strategy can be used on any time frame and any instrument as well. But like I said, I'm going to keep it very simple, all right? So this is going to be one pair. This is going to be the 4-hour time frame only, so one period, and also only one entry model, which is going to be the engulfing candle. Now, we've got the first impulse right here, okay? Then we've got a pullback. We've got another impulse, and we've got another pullback. Now, recently, we've broken above this previous high right here. So I'm going to place my horizontal level right there. And I want to see, as price is pulling back toward that level, is it going to give me a good engulfing candle? Now, something else that you can use as well is the Fibonacci retracement tool. So you place this on the last impulse in price action, all right? So basically this one right here, and you can identify the last impulse by looking at where price has broken below or above previous structure. So like I said, this is our previous high right here. The beginning of this impulse broke above this previous high and it formed a higher high. So that's where I place my Fibonacci retracement tool, okay? Now, this is the 38.2 level, okay? You've also got the 61.8 level. Those of you who have watched my videos on Fibonacci, you already know about those levels. And if you haven't watched them, make sure to do so. There's going to be a pop-up window somewhere on the screen right now. But we're going to be looking at the 38.2 level. Why? Because it's in perfect confluence with our horizontal level, or basically with this previous high. Now, I haven't seen a good engulfing candle yet, but let's see what happens next. As soon as I get an engulfing candle, I'm going to be looking for my entry to the upside. Now, first, it looks like we've got a breakout to the downside. But remember, we're not always looking for an entry from a specific entry level, which is literally to the pip. Instead of that, we consider this rather as a zone and not just a horizontal level, all right? So as long as we get the entry signal, we're happy with that. And this is exactly what I'm talking about. This is the engulfing candle. You see a good, impulsive, bullish candle. And this candle is in the direction of the trend. Remember that, okay? Which totally engulfs this previous candle. So a lot of people got tricked that we're probably going to continue down because it looks like we've got a strong bearish candle. And within the next 4 hours, we've got this bullish candle, okay? So I'm going to place my entry right here. My stop loss is going to go a few pips below this candle right here, all right? Because I'm expecting, since we've got an engulfing candle, then in that moment, a lot more buyers have entered the market. So I'm really not expecting to see price anywhere below this candle, or at least not closing below it. All right. And how do I find out my target levels? Well, obviously you could look at previous market structure here on the 4-hour or even on the daily time frame. But since we started using the Fibonacci 2, we've already got our Fibonacci retracement right here. You can pretty much say that we've got a reaction around the 38.2 level, even though price dipped slightly below that. You know, that engulfing candle closed above the 38.2 level. Okay, and then I'm going to place the Fibonacci expansion 2 again from point A down here, point B, the end of that bullish impulse, and point C is where we've created our, or at least for now what it looks like, our higher low. Okay, now the second target is the one that I'm going to be targeting. Right now, if you are expecting for price to continue even higher, you can take out a part of your position up here and let the rest run and see where price is going to take you. But this is going to be our target right here for this trade. We've got 1 to 2.7. So this is an amazing risk to reward ratio, right? As long as you manage to find a couple of those trades per month, that's absolutely fine, you know. Of course, depending on how much you're willing to risk. But those are high probability trades because as you can see, right after that, price gathers momentum and it just smashes TP. So, like I said, it's a very simple strategy. It's a beginner's friendly strategy as well, but it works really well when you trade it the right way. Look for a trending market, keep it simple, choose one entry model, one time frame, and one pair, and trade that for a few months and let me know how it goes. Moving on to the second entry model. This is an upgrade of the first entry strategy that we saw in this video, but this time we're going to be working with multiple time frames. Now, if you are a complete beginner, I would say stick to one time frame only, but if you've got some experience, then this is something that you can try out. So what are we talking about? Well, we're going to be looking at 2 time frames, okay? Again, I'm going to try and keep it as simple as possible. We're going to need to work with a higher time frame, let's say 1-hour chart or a 4-hour chart. This is where we're going to be looking for a trending move, okay? And we're going to make our entry on the either the 5-minute time frame if we're working with a 1-hour chart, or this is going to be the 15-minute time frame for entries if you're looking for a trending move on the 4-hour chart. All right, this is something that you can use as an example if you're still wondering how to combine multiple time frames. All right, so you're looking for the main move on the 1-hour chart, you're looking for entries on the 5-minute time frame. You're looking for the main move on the 4-hour chart, then you can drop down to a 15-minute time frame and try and find a more precise entry. So let's have a look at this example right here. Now, we've got a downtrend, okay? Let's say we're looking at this on the 1-hour time frame, right? And again, we're looking for break and retest. The next time price pulls back for a retest of a previous level, we're not going to be looking for entries on the 1-hour time frame like we saw in the previous example, but this time we're going to drop down to a lower time frame, okay? So this is going to be, in this case, the 5-minute time frame, right? Because this trend is on the 1-hour chart. So right here on the 5-minute time frame, we're going to be looking for exactly the same setup, break and retest. Why would we do that? First of all, this is going to take more of your time. All right, now you need to find a trending market on the higher time frame. You need to wait for that pullback, and you're not just executing a trade, but this time you're also dropping down to a lower time frame to find a more precise entry. Obviously, it's going to take more of your time. But we do that because this gives us an extra confirmation for our trade. So that also leads to more confidence when we're in that trade, and we're going to be able to hold this trade until it hits take profit, right? And we're not going to be worried on every pullback that price makes against us, because now we have a second confirmation that price should continue in that same trend direction. Right now, we not only have a break and retest pattern on the 1-hour time frame, but we also would have a break and retest pattern on the 5-minute time frame, which occurs on a key level from the higher time frame, right? So that's the whole idea behind this trade. All right, now let me just delete all that, okay? And let's have a look at an actual example on the chart, right? It's probably going to be easier for you to understand. So we've got a downtrend right here, and this is the 1 hour time frame on euro dollar. Now we've got the most recent high, okay? So I'm going to place a zone right here. And in order for this downtrend to continue, we want to see price trading below this most recent high, okay? As long as it doesn't break and close above, then we're going to be looking for selling opportunities. So let's see what we have next here, okay? Now, as you can see, we've got a retest, multiple retests of the previous high, but we haven't yet closed above this zone. Instead of that, we're kind of forming a structure right here, which we can eventually use for break and retest, okay? So I'm going to place a horizontal level like that. Here we go. I'm going to extend it a bit to the right. And we want to see what's going to happen next. Now, if we break below that, then we can wait for the pullback and the retest of this level, where we're going to drop down to the 5-minute chart and look for more precise entries. All right. So let's see what happens next. It looks like we've already got the breakout and we're actually forming the pullback as well. Okay. Now, I'm going to stick to the 1 hour time frame just to see what's going to happen here. But essentially, this is where we will be looking for entries if we're looking at the previous strategy, and the first strategy in this video, right? But instead of that, we see that we kind of have a continuation to the downside, so we can now drop to a lower time frame, okay, the 5-minute chart, and we can see where that breakout occurred. Now here we've got plenty of previous lows to work with, all right? All that is previous structure in the market. Now if we continue further down, we see that we've got a clear breakout now, okay? So we want to see price with a pullback towards one of those levels where we can essentially look for entries, okay? Now it looks like we've got the pullback forming up. So what I'm going to do is, again, I'm going to place my Fibonacci retracement tool, okay? And in the last example, we looked at the 38.2 level because that's where we had the most recent structure. But this time, the most recent structure is up here, and that is in perfect alignment with the 61.8 level. So if I place a horizontal level right here on the 61.8, okay, you can see that we've got previous lows up here, okay, not at the 38.2. So this is where we're going to be looking for our entry. And again, you can pick one entry model. It could be an engulfing candle. It could be another type of entry. But, okay, let me just extend that slightly lower. All right. So we're looking at the 61.8. In this case, this is 1.0925, right? Okay, I'm going to extend this further down. The level is slightly lower, 1.0924. But right here, we have the pullback. Okay, now we've got a perfect break and retest of this previous structure, and we've also got the 61.8 retracement level at that same area as well. Now, what do we have? We've got a strong impulsive candle pushing price into that 61.8. Then the very next candle is an indecision candle. Okay, we've got two wicks on both sides, one to the downside, one above the candle body, and we've got the candle body in the middle. So this is an indecision candle, but the very next candle is a strong bearish candle which closes below the previous one. And we've also got a long rejection wick to the upside, as you can see right here on my screen. Okay, so this is where you would eventually make your short entry. Okay, you can use stop loss just above, this rejection wick, because after this candle, we're really not expecting to see price closing above this rejection wick right here. Instead of that, we would be expecting an immediate push to the downside, right? You could be looking for targets all the way down here to the previous low, and obviously even lower. Okay, we've got 1 to 2.5. Again, pretty decent setup here. And as you can see, price easily breaks below this previous market structure right here, eventually continuing even lower. So this is a pretty decent trading strategy. It's kind of a day trading strategy because this whole thing, it only takes price. Let me just see. So if you do like this, it only takes price about 2 hours to complete this trade all the way down to TP. So I would say this is a kind of a more advanced strategy because you're using multiple time frames. But you can see how good your entries could be, how precise your entries could be if you find those decent setups on the higher time frame and combine them with the lower time frames. And it's time to check out the last entry technique. This is probably the most powerful one and the one that I like the most, because this is the entry technique that I use in my own trading strategy. And again, remember, you can apply this to any strategy that you're trading and any time frame as well. Usually the higher the time frame, the higher the probability is. So basically, we're going to be looking for candles with a long rejection wicks. Okay, so if you're looking for buy trades, you want a candle with a body up here and a strong rejection wick to the downside, a long one as well, that takes out all the previous candles and all the previous wicks that you had on the left. All right, this candle could be with a long body, which is an even better signal, or it could be with a body like this. The most important is that whatever you've got on the left, this wick covers all of that. All right, and this is basically what you call liquidity grab or stop loss hunting, because that shows that this candle at one point was all the way down here, but by the time it closed all the way up here, leaving this massive rejection wick, which is basically it collected all the stop loss orders sitting on the left, and that means the market is ready to continue higher. When you're looking at a bearish example, you want a body down here, a bearish candle like this, with a strong rejection wick to the upside. And whatever you've got on the left, again, this wick covers all of that. So let's check out this example right here. This is Euro Yen, and right here we're looking at an uptrend example, as you can see, right? So I'm going to zoom in a little bit so we can see that better. In this case, you don't even need to see price breaking above previous structure or forming a break and retest pattern. In this case, you can trade this in a ranging market or again in a trending market, just like here, but when price forms a deeper pullback, right? Now, in this case, what we have here is a pullback towards previous lows. So as you can see, we're not breaking above this previous structure right here and then coming back for a retest and forming a higher low. Instead of that, price haven't even yet broken above this structure, but it pulls back all the way down here to retest the previous lows, right? So what do we have here? Now, we've got some structure right here on the left, okay? We've got another structure with this rejection wick, but the one that's most important is this one right here, the most recent candle that we had here on the 30-minute time frame. As you can see, this wick covers all of this structure to the left, right? Now, let me just move this horizontal level down here at the lowest point of all that structure that we have. And as you can see, this wick covers all of that. Spikes below this horizontal level, and by the time this candle closes, it closes all the way up here. Okay, so this is a strong buy signal, and you can use this still probably a more aggressive signal and a more aggressive entry, but you can use a stop loss just below this wick, right? We're talking about a really tight stop loss. And again, depending on price action, or previous key levels, you can use, you can find where your target is going to be. In this case, we can use again the Fibonacci expansion tool. We're going to place our take profit all the way up here, and then we're looking at the next thing that happens. As you can see, we normally gain a strong momentum after a candle like this, right? And it makes a lot of sense because we've just gathered all that liquidity sitting below those equal lows right here, and the market is ready to explode in the direction of the trend. So as you can see, this is a very, very powerful entry technique. Like I said, it's something that you can use with any trading strategy on any time frame as well. You just need to have previous structure that has been taken out with the rejection wick, so you can then execute your entry. All right, and you can see how powerful this is. I mean, every time we've got those massive wicks to the downside, price pushes to the upside, right? You can see the same thing here. The market has formed those rejection wicks, and then we see momentum to the upside. All right, that works very, very well, works on all time frames, and it works on all instruments. The whole idea is not just based on horizontal levels or indicators or anything like this. The logic behind it is very simple yet very powerful. If you found this video helpful, make sure to hit that like button, share it with someone, leave a comment down below, And don't forget to check out all the links below the video. That's where you can join our free Telegram channel for more trading information.